Okay, let me ask you something. What if the prices of everything you buy your daily groceries, that new car you're eyeing, even the cost of rent didn't just stay the same or steadily climb, but actually kept falling year after year?
Yeah, I mean, it sounds almost fantastical, doesn't it?
Totally. It's completely counterintuitive to, well, every economic lesson we've ever absorbed, every lived experience we've had.
Right.
But today, we're plunging deep into precisely that idea. A future where productivity naturally drives prices downward, leading to a profound state of abundance.
And how a surprising, often misunderstood technology like Bitcoin could be the fundamental force behind this huge shift.
Okay, let's unpack this truly revolutionary perspective.
What's fascinating here is how our source material, which really dives into the insights of economist Jeff Booth, lays out what he calls mind-blowing predictions.
Mind-blowing is right.
He's not just, tweaking existing economic models. He's presenting a fundamentally different lens to view our economic and political future.
A future that radically departs from the constant inflation we've just, well, accepted.
Exactly. So this deep dive will explore his vision of a truly free market, what it means to create genuine value in that kind of system.
And crucially, how a decentralized digital network like Bitcoin isn't just a new form of money.
But a profound challenge, really, to the very foundations of centralized control that shape our current global systems. It's about questioning the very air we breathe, economically speaking.
So our mission for this deep dive is to try and distill these complex, kind of paradigm-shifting ideas into clear, understandable terms for you.
Yeah, help you grasp not just how a future of ever-falling prices and true abundance could be possible.
But also why Booth suggests it might be the natural, the default state of an economy that isn't being manipulated.
And beyond the economics, we'll scrutinize what this implies for global power dynamics.
All through the lens of Bitcoin's quiet but powerful emergence. Get ready to have some long-held assumptions turned upside down. So let's begin with a concept that we're all intimately familiar with, often frustratingly so. Inflation.
Mm-hmm. The bane of budgets everywhere.
Exactly. We are absolutely accustomed to prices perpetually rising. It's this insidious feeling that we're on a never-ending treadmill, right? Always needing to earn more, work harder.
Just to stay in the same place.
Just to maintain our current standard of living. You budget for something, save diligently, only to find when you finally have the money, its purchasing power has eroded and the price has climbed higher. It's exhausting.
It really is, this constant battle against a moving target.
But Jeff Booth fundamentally challenges this. He argues this constant upward pressure on prices isn't natural. It's not healthy economic phenomenon at all.
He posits it's an artificial construct, really, a symptom of a manipulated system.
That's a crucial distinction he makes, isn't it?
It really is. Booth's core concept, while, simple in how you say it, is profoundly disruptive to our conventional economic thinking. He argues that in a truly natural, free market system, one driven purely by innovation, efficiency, and real-world productivity, prices should inherently fall.
Fall, now rise.
Fall.
Yeah.
Consider the relentless march of technological progress. Every year, computers get faster, more powerful, yet often cheaper.
Right, like my first computer versus my phone now. It's incomparable.
Exactly. Manufacturing processes become more automated, more precise, needing less human labor or raw materials per unit produced. That is productivity in action.
The ability to create more with less effort, fewer resources, higher quality.
Precisely. And when these efficiencies happen, the cost of production naturally goes down.
Okay.
And in an unmanipulated market, that decrease should directly translate into lower prices for consumers. This isn't just theory. We see it, like you said, in computing, electronics. Prices have trended down for decades there.
So why not everywhere else?
That's the $1 million, or maybe the 21 million Bitcoin question.
That's right.
And this leads us to Booth's really provocative insight, what we might call the job paradox.
The job paradox. Okay, tell me more.
It challenges the very purpose of, so much of our daily grind. He suggests that the job you go to every day, the one you think you desperately need for groceries, rent, your car, is only necessary because those prices are artificially being forced up.
Whoa, wait, say that again?
Think about it. Imagine a world where, because of natural productivity, the cost of living consistently decreases.
Okay, like things get cheaper every year.
Right. If your purchasing power was continually increasing without you having to chase a higher wage just to stay even, The fundamental need for that job specifically, the need for it just to cover basic costs and fight inflation, would significantly diminish.
So you wouldn't need the job just to survive because survival gets cheaper.
That's the core idea. Our current system traps people on this, like hamster wheel. You
Yeah.
feel perpetually behind, wages struggling to keep pace with manufactured inflation.
It shifts the purpose of work.
Exactly.
Sure.
From creating genuine value to simply trying to maintain equilibrium in a system designed to keep you needing more.
It makes you wonder, if basic needs were genuinely affordable, what would people do with their time?
What kind of innovation, what societal contributions, what personal pursuits might we actually dedicate ourselves to? It's a profound question.
So if that's the case, if prices were indeed following this natural law of declining costs, then abundance takes on a totally new meaning,
Completely different. Instead of dreading prices going up 3% or 5%.
which feels like a win sometimes, sadly.
Right. Imagine if they continually fell, say, 5% a year, then maybe 10%, maybe even 15% annually, as technology and productivity really kick in.
If that were reality, we'd be living in increasing, almost exponential abundance.
Your purchasing power would naturally grow. Things you need and want become progressively more accessible.
The goal shifts. Not just accumulating money to preserve buying power.
But truly benefiting from humanity's collective ingenuity.
Okay, to really grasp this, let's use that metaphor you mentioned.
Right, the gravity metaphor. Think of Bitcoin in this view as a kind of natural force of economic gravity.
Okay, like physical gravity pulls things down.
Exactly. Bitcoin, through its fundamental design, its fixed supply, its resistance to inflation, pulls prices down towards their true efficient cost. It strips away that artificial inflation.
So it's not manipulating the market, it's restoring natural order.
That's a good way to put it, reestablishing the natural economic order. This inherent downward pressure lets us build and create things based on genuine need and value.
Solving real problems, making real improvements.
Instead of just engaging in activity to offset rising costs or maintain some artificially inflated lifestyle, it fundamentally shifts the whole incentive structure.
But this often sparks that immediate counter question, doesn't it? I mean, I'm thinking it too.
Absolutely. The one everyone asks, especially those stuck in traditional economic thought.
Which is, what incentive would there possibly be to build things, to innovate, to take risks, if prices kept falling and your money was worth more anyway? Why bother?
And Booth's answer is, I think, both elegant and profound. There will always be problems for humanity to solve. Always. There will always be new frontiers to explore, challenges to overcome, new ways to improve lives beyond just basic survival. The drive for innovation, it's inherent in us.
So the incentive doesn't vanish.
It just shifts. It moves away from chasing artificial inflating prices, that fear of being left behind, towards creating genuine, undeniable value that truly serves others. Solving real problems, bringing new forms of joy or convenience, people will still strive for more.
But not out of fear.
Not out of fear of falling behind, but out of a desire to build a better future, achieve personal mastery, leave a meaningful mark.
Yeah.
The human drive to create, improve, connect. It's way deeper than just financial survival.
Okay, so if prices are falling and the old incentive of just keeping up with inflation is, well, gone, how do individuals get paid? How does wealth accumulate? How do we measure prosperity in this radically different world?
Right, and this brings us to Booth's fundamental principle of value creation in a truly free, unmanipulated market.
How does it work?
In this system, you get paid very simply, very directly, by creating value for others.
Value for others.
The more profound the problem you solve, the more people you benefit, the more widely useful your solution or product is, the more you get compensated.
So it's a direct, unmanipulated exchange.
Exactly. Your earnings directly reflect the positive impact you have. It's not about how much money you can print or how much debt you rack up. It's purely about genuine contribution and service.
It values ingenuity,
No,
utility.
above all else. And critically, this system thrives on relentless productive competition.
Yeah, competition. So someone else sees the value you're creating.
Recognizes the demand, and naturally competes with you. Now, in our current world, competition often feels like a zero-sum game, a race to the bottom sometimes.
Yeah, cutthroat.
But here, it's a powerful, positive force. This competition does remove some of your initial profit margin, sure, because others offer something similar, driving prices down for the consumer.
Okay, so your slice gets smaller.
But this pressure isn't destructive, it's constructive. It forces you to innovate, find more efficient ways, differentiate, provide more value for the same or even lower cost.
So it pushes everyone to get better.
Constantly. It's this iterative push for innovation. And the ultimate result of all this competitive, value-driven action is that all prices across the economy keep falling.
And here's the really elegant part you mentioned.
Everyone ultimately wins. You, the creator, win because you're pushed to innovate, hone your craft, grow.
And everyone else wins, too.
Everyone else wins because even if you're not directly competing in that specific area, those who are competing are creating more value for you as a consumer.
Through perpetually lower prices, higher quality, better products, across the board.
It creates this virtuous cycle.
Yeah.
Improvement, efficiency, increasing affordability for everyone, all driven by the simple desire to create and serve.
Wow. That paints such a stark contrast with the current centralized system we all live in.
It really does.
It sounds like the only way you lose from this natural equation of falling prices and abundance
Where productivity and competition drive prices down.
is if you live in a centralized market, where prices are, by design, artificially made to rise. It's like a system working against natural efficiency.
Precisely.
And this is where Booth brings in what he calls the government paradox.
Yeah, this is a really interesting point.
In our current situation, when prices are higher and you find yourself struggling, maybe falling behind, who do you instinctively turn to?
The government. For help, for programs, for relief.
Right. And what's truly unsettling from Booth's perspective in the sources is that this very government is often creating the problem of artificial inflation in the first place.
Through its monetary policies, through, well, money printing, as many call it.
Yet we turn to them, asking them to save us. And what do?
They respond by creating new programs, new initiatives, funded by your own money through taxes, or worse, through further currency debasement, which is just more inflation down the line.
So it perpetuates the very cycle of dependency and artificiality.
It's a self-reinforcing loop, designed, maybe not intentionally by every single person, but systemically to keep us on that economic treadmill, needing that job to pay for prices that are rising because of the system itself.
You realize the solution we seek from central authorities often comes from the very problem they create.
That's precisely the core of his argument. The vision Booth describes for a truly free market where prices fall naturally
Due to genuine innovation and real competition.
is what he calls the perfect expression of humankind trading with each other in service of humankind.
It sounds almost utopian, but grounded in logic.
It's a system where value is tied to real contribution, where the collective benefit of efficiency is passed directly to the consumer, not siphoned off by inflation.
It transforms the landscape from artificial scarcity to potential genuine advancement and shared prosperity.
Aligning economic incentives with human flourishing.
Okay, so this brings us right to the crucial link.
Oh.
What does all this grand economic theory have to do with Bitcoin? For many, it's still just, digital money or a speculative thing.
Right. How does Bitcoin fit into this picture of falling prices and abundance?
Yeah.
Here's where it gets really interesting. And where Bitcoin becomes more than just an asset, it becomes a fundamental force.
Okay.
In Booth's view, Bitcoin isn't just tech. It's an imposing force of economic discipline on the global economy.
Economic discipline. How?
Well, in layman's terms, Bitcoin is designed with a fixed, absolutely unchangeable supply, capped at 21 million units. Period.
Cannot be changed.
Cannot be changed. And its issuance schedule, the rate new Bitcoin is created, is totally predictable and set in stone in the code.
Okay.
This architecture makes it fundamentally resistant to that arbitrary artificial creation of money, the unlimited printing that drives inflation in our current systems.
Because no central bank, no government can just decide to make more Bitcoin.
Exactly. No one can just create more out of thin air. Its scarcity, its absolute fixed limit, inherently incentivizes long-term thinking, saving, true value creation.
Rather than just spending fast because you fear your money will be worth less tomorrow.
Precisely. This fixed supply provides a reliable, predictable measuring stick for value, allowing prices to actually reflect genuine productivity gains, not just monetary expansion. It's the ultimate hard money in an increasingly soft money world.
So, by its very design, it puts a hard limit on manipulation.
A hard, unyielding limit on the ability of any central authority to inflate their way out of problems or arbitrarily redistribute wealth through currency debasement.
And this allows that economic gravity you mentioned.
To pull prices down towards their true cost, unburdened by that currency debasement. And the source emphasizes a really powerful point here.
What's that?
If you own part of Bitcoin, you are already part of that system.
Wow. just by holding it.
just by holding it.
Yeah.
You are, by virtue of that choice, participating in and actively supporting this new economic paradigm, one where value is earned through genuine contribution and prices naturally trend downwards because of productivity and competition.
Like a quiet but profound shift in allegiance, opting into a different system.
Participating in a more honest form of economics, arguably.
Okay, beyond these huge economic shifts, the source material suggests Bitcoin has really profound geopolitical implications too.
Oh, definitely.
It makes a very bold statement, saying quite directly that Bitcoin is terrible for dictators.
That's a strong claim, yeah.
But it starts to make intuitive sense when you unpack the mechanisms, doesn't it?
It's a critical point. It really strikes at the heart of how centralized power, especially dictatorships, operate and maintain control.
How so?
Traditionally, consolidated power, especially in authoritarian regimes, relies heavily on two main pillars: manipulating money and controlling information.
Right. Control the purse strings and the narrative.
Exactly. If you control the money supply, you can fund armies without direct taxation, create programs to buy loyalty or quell dissent, or just inflate away people's savings to maintain your grip without actually confiscating it overtly.
That's insidious.
And our sources highlight a really concerning trend, citing stats from Democracy Lab in Costa Rica. Apparently, just 10 years ago, about 47% of humanity lived in nations considered democratic in some form.
Okay, nearly half.
Now, only a decade later, that figure has plummeted to around 18%.
18%. That's
Yeah.
shocking.
It means roughly 82% of the world now lives under some form of authoritarian rule or dictatorship. And this alarming erosion of democracy, according to Booth's analysis in the sources, is directly linked to the increasing manipulation of national currencies and financial systems.
Wow. So the money manipulation fuels the authoritarianism.
That's the argument presented. The source posits this stark progression. Often, when problems like inequality or distress arise from this artificial money creation,
Right.
nations might first try socialist policies, thinking they can centrally plan their way out.
It's trying to fix it from the top down.
But because socialism, in this view, can't fix a problem rooted in artificial money and top-down control, the system strains, leads to more instability.
And
then, the source argues, this can pave the way for a move towards fascism where power is brutally consolidated, freedoms are curtailed, and control becomes absolute in a desperate attempt to maintain order.
that's chilling progression.
And this entire cascade, the source claims, is fundamentally rooted in money coming artificially from a central authority instead of flowing freely, transparently, naturally.
Letting individuals build and thrive based on their own value.
It frames currency itself as a critical tool of political control.
And this framework helps us understand why governments, even seemingly democratic ones, are so keen on central bank digital currencies, CBDCs.
Exactly. They aren't just digital cash. They are potentially highly sophisticated tools for even greater centralized planning, surveillance, and control.
The opposite of Bitcoin's decentralization.
The absolute antithesis. With CBDCs, a central authority could potentially track every single transaction, put expiry dates on your money, dictate what you can spend it on,
Or just freeze your funds instantly.
giving them an unprecedented, frankly chilling level of power over individuals. It's the ultimate centralized financial control, completely at odds with the freedom Bitcoin aims to offer.
But I can still hear listeners thinking, and I think it too, couldn't a powerful government, with men with guns, just shut Bitcoin down?
Yeah, the state attack vector. It seems plausible, right? An unstoppable state versus a digital network.
Especially if it genuinely threatens their control over money.
This is where the truly ingenious design of Bitcoin and this critical concept of nodes comes into play.
Nodes. Okay, explain nodes simply.
Bitcoin isn't controlled by one person, one company, one central server. It operates as a vast, globally distributed network of computers.
Okay.
Each computer independently runs the Bitcoin software and keeps a full, synchronized copy of the entire transaction history, the blockchain. These computers are the nodes.
How many are there?
Tens of thousands, spread across every continent, run by individuals, companies, enthusiasts, anyone who chooses to support the network.
So to shut down Bitcoin.
You'd have to find and shut down every single one of those thousands of nodes, simultaneously, across every country on Earth.
That sounds difficult.
Bordering on impossible. It's an incredibly resilient structure.
So the analogy the source used,
Yeah.
the guerrilla warfare one.
Right. It's a powerful, if military, analogy. This is why all the guerrilla warfare was as successful as it was.
How does that apply?
Think of huge centralized military forces, the British Empire, the Soviets, the US and Afghanistan or Vietnam. Massive tech, logistics, command structures, immense power.
Yeah.
Yet they were often frustrated or even defeated by what the source calls a bunch of independent nodes with AK-47s, small, independent, decentralized units, no single head to cut off.
Because they were distributed, resilient, hard to pin down.
Exactly. The point is the distributed, unstoppable nature of many small, independent units against a single, powerful, but ultimately vulnerable central force.
And Bitcoin is like that, but peaceful.
Precisely. You can run a Bitcoin node from your home, maybe hidden behind Tor, making its location obscure. You're a small, independent part of this global network.
And the more nodes,
The safer, more secure, more resilient the whole network becomes. It can't be stopped by targeting one point of failure because there isn't one. It's like trying to put out the sun by blowing out one match.
makes sense.
And the source also mentions new tech like Fedi and Fedimint.
Expanding this node model.
Yeah, offering enhanced privacy, extending the network in a kind of guardian model, making it even harder to stop, further solidifying Bitcoin's resilience against central control.
It's about censorship resistance, immutability. No one can stop your transaction or change the history.
That's the power of true decentralization.
This all sounds so profoundly different from how we're normally taught to view the world, our economy, our political systems.
It really is.
It's like seeing beyond a veil or some long-held illusion we just accepted.
It absolutely is. Booth himself says it's not intuitive. Why? Because we've been conditioned for decades, maybe centuries, by education, media.
To think inside a certain box.
Exactly. Within a specific economic and political framework, what he calls the matrix, it requires you to zoom out, think outside that ingrained perspective, challenge assumptions you hold dear.
But he also says once you see it,
You can't unsee it. Once you grasp this underlying reality, this potential alternative, it clicks.
it's about recognizing this paradox we live in, this control system, that maybe benefits a few at the expense of many.
And then realizing an alternative, a genuinely free and abundant system, isn't just possible, but it's actively being built and chosen by millions.
Like waking up to a truth that was always there, just obscured.
Plain as day, but hidden by conventional wisdom.
And it makes you really reflect on the sheer brilliance behind creating this system. Not just the tech genius,
Though that's immense.
but the profound understanding of human nature, economics, power dynamics that went into Bitcoin's design.
Indeed. It speaks volumes about Satoshi Nakamoto's incredible vision. And also, importantly, to the dedication of the cypherpunks,
Who are they again?
a movement of privacy advocates, crypto-anarchists, people who believed in using cryptography for social and political change to free individuals from state control. Some risked a lot to free money from state hands.
So it's not just code, it's a deep philosophical stance.
For financial freedom, individual sovereignty. And the most compelling part isn't just the theory, it's the reality now. The scale, the growth.
It's huge already.
The Bitcoin network is vast, incredibly resilient, and expanding faster and faster. It's not just an experiment anymore. It's a living, breathing, rapidly growing reality.
And so this brings it right back to you, the listener. It becomes a very personal, increasingly profound choice.
Absolutely.
Once you've seen this potential for a different system, more equitable, maybe more abundant, built on sound money and freedom, not control and inflation, it's hard to ignore.
So what does this all mean for you?
Yeah, you kind of have to ask yourself, really look inward. Why would I want to keep living and participating entirely in this other system, this control system, when I can choose to live in and contribute to this new emerging system?
It's about where you allocate your time, your energy, your economic participation.
Your allegiance, really, in the future of the global economy.
It's a fundamental choice that's becoming clearer every day.
So today, we've really unpacked this counterintuitive but maybe deeply logical idea of falling prices, driven by real productivity and competition, leading to genuine abundance.
And we've looked at how Bitcoin acts as this kind of natural enforcer of economic discipline.
Challenging centralized control, offering a decentralized, unstoppable alternative to the existing power structures.
It's a lot to take in.
It really is. So here's a final thought to leave you with. If productivity is humanity's natural state, and if Bitcoin allows for the truest, most unmanipulated expression of that productivity,
Then what other unseen truths might be hiding in plain sight in our economic and social world?
what else are we missing just because we accept the current narrative? Something to mull over.
Definitely food for thought.
If this deep dive sparks something for you, definitely make sure to follow, like, and share the podcast. We'd really appreciate it.
Yeah, help spread the word.
And to keep exploring these fascinating ideas, you can follow What Bitcoin Taught Me on Twitter X, Nostr, Bluesky, Threads, Instagram, Facebook, and LinkedIn. We're pretty much everywhere.